So thank you everybody for joining us today for the Keys to Growth, Assessing Profitability for Multi-Channel E-commerce Sellers. I'm Chris from Webgility, the leader in accounting automation for e-commerce sellers, and I'm joined by Emily Wilcox. Emily is a founding partner at Elevate Growth Group, where she's responsible for helping clients grow and sustain profitable businesses on Amazon. Thanks, Emily, for joining us.
Yeah, thanks for having me.
So I'd like to level set today's call. We're going to start by talking about the 3 key ingredients in a profitable e-commerce recipe. And then once we've talked about how to grow profits, we'll talk about assessing profitability through a number of different lenses to help e-commerce sellers grow smarter. So profit can kind of be broken down into these 3 key components, right? You've got your sale price, your cost, which of course encompasses both cost of goods sold and operating costs, and of course quantity or your total order volume. And these are kind of the 3 levers that you can pull in each of these in each area to impact your total profitability. So let's start by delving into stabilizing and in some cases increasing your price. So there's a number of ways to focus on products with little to no competition. One way is to go completely custom, right? Sell products that are customized for individual customers, made to order. But that's a little high touch for some sellers who have their eye on the second component of profit, which is cost cutting. So for sellers who are looking kind of to specialize without every order becoming sort of a hands-on ordeal, you can focus on niche or specialty products, which can be a way to hold the line on prices while still delivering high value to a highly engaged community.
One of the other things that we do quite a bit of with the brands that we work with is looking at ways to increase the prices through bundling products. This is especially helpful on Amazon, where the FBA or the fulfillment fees are fixed based on like the weight and dimensions of the product. But often if you can bundle a couple items together, it creates less competition and it also increases prices, which helps drive profitability as well.
Right. Thanks, Emily. So kind of a perfect example of this strategy of selling products with little to no competition can be found with Webgility's customer, Groomers Pro, who some of you may remember from last week's webinar on expanding to multiple e-commerce channels. So Marco Lalao launched Groomers Pro as a dog grooming on the go business run out of a van in Southern California. The business grew quickly and they started identifying and selling grooming tools directly to their own customers and kind of made a name for themselves as a curated source of like best in class grooming supplies. So as the retail side of the business took off, the company expanded to a catalog business and then online with 2 big commerce websites, one selling pet apparel, one selling grooming supplies, and mostly selling to groomers all over the country. And though the direct sales channels were successful, Lalao saw the opportunity to reach audiences where they were already shopping on Amazon. But he employs a different sales strategy there, and he's selective about what Groomers Pro sells on Amazon and chooses kind of specific products that have little to no competition there so he can protect his margins while still winning sales. For example, the company sells buckets of individually wrapped dog toothbrushes, which they white label. There's almost no other competition for that specific type of product on Amazon. And it's particularly appealing to professional dog groomers who often have kind of like fur flying around their workstations and they want that extra layer of protection over each of those toothbrushes. So Groomers Pro found a narrow but interested buying segment and a way to deliver those consumers what they needed without competing on price with other vendors. So the strategy has helped the company grow orders by over 200% in just 2 years. and they add new products to Amazon whenever they find a void in the market that they're sort of particularly well positioned to fill. Um, Another way to increase prices is to just improve your product listings, right? Um, so according to a web retailer, the average shopper only reads 20% of the words on your page, but they'll view every single product image. And 63% of consumers say that product images are more important to them than descriptions. So if you really want to convey product quality um, and the qualities of the product, the best way to do that is in visual form. And that's true for videos too. Um, so one way to look at high quality photos is this: if you're not giving customers the photos they need to entice them to buy your product, you have to entice them another way, which is probably by lowering your price. Um, in addition to these visual elements, the written copy is still valuable, but I'd encourage you to think of it as kind of an SEO play or search engine optimization play. SEO drives traffic to your website or to your Amazon product listing. And if you're capturing the lion's share of traffic through a clever keyword strategy, you can maintain healthy price points and still capture buyers. And then finally, reviews. Driving reviews to your Amazon store or to your own website is key. Shoppers like to hear from other customers that they've had a good purchasing experience with your business and with your products. So these reviews kind of help reinforce the idea that you're selling a quality product, and will justify you charging a fair price. So if buyers see few reviews or lower reviews, they may feel that they're taking a risk by shopping with you, and your products will kind of need to be priced more competitively in order for shoppers to feel justified in taking that risk.
Yeah, and I will say improving product listings is of paramount importance on the Amazon platform, where it is a marketplace, and so your products are side by side with competitor products. This is hugely important for conveying quality and creating the perception of having a real brand behind the product, which is what allows you to have sustainably higher prices and still move the volume that you want. And so when we work with brands, almost always we're doing a real audit and overhaul of their product listings before we really do too much on the advertising side of things, because your images impact everything. It impacts the click-through rates on the ads, it impacts your conversion rate. And both of those things impact the Amazon algorithm, which determines where your product shows up organically. So super, super important. And to your point, Chris, about not many people reading words. Oh my gosh, we see this so often on Amazon, particularly if your product is like less than $60, where it's just more of an impulse buy. Good luck getting anyone to read anything. They're really just going to be looking at the images and the star ratings or the reviews. So we really encourage the brands that we work with, and we collaborate with them to create imagery that is both high quality, but also very educational and full of the benefits of the product as well. So I really encourage everyone listening to think about how they can use their images to really tell the story of the product and of the brand.
Yeah, I've been seeing more brands including images in their Amazon photos that show the dimensions of the product, which I think can be really helpful even in reducing returns too, right? If the customers see those dimensions right up front and they don't have to kind of comb through the copy that they're not interested in reading, it's going to make sure that they're buying something that's the size they expect it to be.
Absolutely. So not only does it reduce returns, but it also improves your conversion rate, because what you want to think about is reducing friction. So anything that would stop someone from clicking add to cart and buying it right away is a problem. And so for clothing and apparel, it's always size related. That's your biggest friction, is how is it going to fit my body or my child's body? And then yes, for other products, it often has to do with the dimensions, or there's just one component. And so that's on you as the brand owner to really study your competitors' listings, listen to your own customer feedback, and find ways to be more educational upfront so that you're reducing that friction and making it really easy for a shopper to click add to cart.
Yep, totally makes sense. So now that we kind of talked about prices, like let's move on to costs. There are tons of ways to lower costs, whether you're selling on your own website, on Amazon, or through different channels. And these are just a few of them, but they can often be the easiest or the most impactful to deploy. So you can lower shipping costs by comparing carrier rates if you're selling on your own website. You can do this easily with Webgility's shipping module, but also with a number of other shipping solutions that are widely available. And you can cut inventory carrying costs with forecasting. So once you have a solid handle on your inventory throughput, you can adopt like a just-in-time delivery program, which allows you to hold inventory for less time, meaning that you have less in stock at once, and you require less warehouse space then, right? But it also, like this kind of just-in-time delivery solution can also improve cash flow by allowing you to have less cash tied up in inventory at any given time. And you can also kind of deploy this same strategy on Amazon through their storage program. If you get really good at predicting sales throughput, you can avoid being penalized for holding items too long with Amazon's warehouse. And Webgility's inventory forecasting module, or a really granular understanding of your own sales trends, can help you know the right amount to order and to hold.
Yeah, 100%. You know, the clients that we work with, we spend a lot of time looking at unit economics and looking at their margins. So if they're not where they want them to be, sometimes it can be really helpful just to have a third party take a look at it. And I know that that's something, you know, that Webgility is really good at as well, that, you know, you guys are able to kind of help from a little bit of a business consulting perspective also. But you know, just having that third party ask a few questions and look at the numbers and come up with really creative solutions. So, you know, whether it's negotiating, you know, volume discounts with suppliers, sometimes your suppliers will even store for free. So you can place a larger order with them and they'll produce it all at once and leave some of it stored there, and then just ship it when you're ready for it and charge you at that time. Using a third-party fulfillment center can be really helpful in lowering shipping and storage costs, because any third-party logistics or fulfillment center is going to have really great volume discounts. And so you're able to piggyback on those. And typically their storage fees are less than Amazon. So a lot of the brands we work with, they manufacture, and if they import, then they would import also their product to a 3PL. And then a portion of that inventory will get shipped into Amazon fulfillment centers as it's needed. And then one of the other creative solutions that we've discussed and successfully implemented with some of the brands we work with is using cashback credit cards for advertising. So specific to the Amazon platform, you can select a different payment method. It doesn't have to just deduct from your Amazon payment. You can also pay for your advertising with a credit card. And if you're using a credit card that offers 1% cash back on all purchases, then you've just saved 1 point of margin on any of your sales that come from your paid advertising efforts, which is often like 50% of your sales on Amazon, depending on the maturity of your brand.
I love that suggestion. It's so scrappy and it's like something that's so easy to implement right away.
Totally. Yeah. And it was one of our clients who said, yeah, I do this. And I was like, oh, that's so brilliant. So again, that's the benefit of talking to people like Webgility, people like us at Elevate, talking to, you know, your great operations person at your third-party logistics center. They see so many brands and so many clients and different ways of doing things that oftentimes they've just been exposed to more innovative solutions.
Awesome. So I think when we think about lowering costs, kind of key in that equation is understanding your cost structures, which can be somewhat challenging when you're selling on Amazon. Right, like in addition to the base vendor fee and referral fee for all sales, there are a number of smaller fees that are charged based on the specific items, categories, or order sizes of your orders that you're selling through the platform. For Amazon sellers who are using FBA, there's also like a completely separate fee structure that's additive to the base fees that Amazon charges its sellers. And an Amazon expert like Emily can kind of help you make sense of those fees to optimize your business and reduce them ultimately.
Yeah, and when we're talking about lowering costs, what we're, specific to Amazon, some of these like the long-term storage fee, trying to reduce storage fees, labeling, package prep, unplanned prep, those types of things ultimately come down to either you're being lazy or you've got a supply chain that has problems. So I think it's good to keep an eye on them just to make sure that you're not being hit with those fees. But typically, if you've got a strong supply chain, they should be doing all the labeling and packaging and everything for you and getting it completely Amazon ready. So I would say we don't see those as often, but you only know if you've got a problem if you're monitoring it. And even like with the fulfillment fees or the referral fees, it's something that we monitor regularly for our clients because we've seen a lot of instances where something goes wonky. And Amazon starts charging a different referral fee, or they did a Cuba scan on your product and they came back with different dimensions, and now they're charging you more for the FBA fee than what you were being charged before. So it's a really good idea to keep an eye on that stuff and know what's normal for your brand. So that way you can pretty quickly raise a red flag if there's an issue. And so when we talk about Amazon unit economics, this is just like kind of a rough sketch, but it's helpful to understand what your breakdown is and what your net margin typically is. So this is just looking at one unit, but I grabbed it from a cost calculator that we use that you can, kind of adjust a few cells and then be able to look at it at scale. But in this example, we're talking about an item that has a $4 cost of goods and that sells for $20. So in the middle column, you can see that your cost of goods accounts for 20% of your margin right there. So now you've got a gross margin of 80%. Then we look at the other items and we just have them in a few buckets. Inbound shipping into Amazon, 1%. It may not even be 1% for your products. Again, this is an example of Amazon getting insanely great bulk discounts with the carriers and passing that along to you as a seller. Advertising and promos. So we generally tell brands to budget 12.5% of your margin to advertising and promotions. However, if you have a brand that's more established, and so you're already getting branded search traffic, meaning that customers are looking for your product by name, in those instances, you can get away with sometimes like 8% for advertising and promos. Amazon referral fees. So this is category specific. 15% is the most common, but in certain categories like health and beauty and grocery and gourmet foods as an example, it's a tiered referral fee. So if you're under like a $15 selling point in grocery, then it's an 8% referral fee. If you're under a $10 price point in health and beauty, then it's an 8% referral fee. So you can get those fees directly from Amazon. And then the FBA fees, this means the fee that is charged for Amazon to pick and pack and ship your product, prime shipping, to the end user. It's based on the weights and dimensions of the product. So As a general rule of thumb, for most brands and most products, all the Amazon fees put together, aside from the advertising, so just the Amazon referral fees, FBA fees, storage fees, returns, it's going to be about 30%. So that's what you want to budget for until you have actual data to break it down further. But just plan on about 30% going to Amazon for referral fees, FBA fees, storage, etc. And then plan on 10 to 12% for advertising and promotions. And then you'll be able to see what your net sales is. So in this example, these are really healthy net margins, 35.5%. So just typically, if you can be above 30% for net margins, you're doing really well.
Yeah, and when you think about properly understanding your expenses so that you can later analyze profitability by channel, like Emily just did for Amazon, it's important to think about expenses like advertising, web hosting, and fulfillment expenses as expenses that are associated with your direct business, not your overall business. So in the same way that Amazon storage fees and FBA fees are costs associated with your Amazon business, web hosting, for example, is only associated with your direct business. So you need a way to make sense of these costs so you can know your numbers better by channel.
Yeah, I would say that when I talk to brands that are thinking about expanding to the Amazon channel but haven't done it yet, they are under the impression that their margins are much higher on their website and they're concerned about their margins on Amazon. And sometimes that's true, but sometimes it's a little bit harder to attribute your costs to your direct sales through your website because it's more fragmented. So with Amazon, you can literally see what your gross revenue was, and then you can see what the payout is. And so you really feel those Amazon fees. Whereas on your website, you're getting paid out on a gross amount, but then you've had to pay your social media manager. You had to pay Facebook for the ads. You had to pay Google for the ads. If you have an agency managing your Google AdWords, you had to pay them for that. Any influencers you worked with, you had to give them free product and sometimes pay them. And so it's much more fragmented. And so getting a good handle on that using software can be super helpful.
Yep, agree. And that's something that Webgility can do as we kind of help tie together the financial data that you have housed in various systems. So we've talked a bit about stabilizing your prices, about understanding and reducing costs, and now we're going to think about growing your order volume and your customer base. So the fastest way to scale your orders is to expand to more channels, right? If you're already selling on your own website, you've done the hard part, you've built the customer base from scratch. It may be time to move to Amazon where there are millions of customers already shopping who may already be familiar with your brand and have some brand affinity because of the brand that you've built on your own website. Conversely, if you're already selling on Amazon, you may want to consider opening up your own website to sell direct to your customers in the same way that you may have built a brand affinity with them on Amazon, and they could be willing to shop you directly through your own website. But you're going to need to also focus on attracting new customers, which can be more challenging with a direct business. But to Emily's point, in some cases, the margins can be more favorable and more under your own control when you're selling on your own website. So last week we did a webinar specifically on the topic of expanding to multi-channel. So if you're thinking about this as a growth strategy, I'd really encourage you to visit that bit.ly link that I have down in the bottom there to kind of help launch a deep dive into thinking about channel expansion as a growth strategy.
And I'm popping that link into the chat so anybody can more easily grab it.
Awesome, thank you.
So the only comment that I'll make on this channel expansion is I've seen brands and business owners make the mistake of having actually too much focus on profitability when they're expanding to new channels. And typically any channel expansion is going to be an investment, meaning there won't be any profitability. You'll lose money for a while. Or in a best case scenario, you'll have very thin profit margins. And so while I think it's good to know the numbers, you can really hinder yourself if you're focused so much on profitability that you're not able to increase quantity. So if you're on Amazon and you're like, every sale from sale number 1 needs to have 35 points of margin or I'm out, you can do that, but you may only ever sell like 10 units a month. And so you're really sacrificing the investment that's needed in order to build up the quantity. So what we've seen work super successfully is understanding that any channel you expand to, whether it's Amazon, your own website, retail distribution, that it's going to be an investment, and just know your numbers, know you're not profitable, so that you've got an idea of what's happening from a cash flow perspective. But once the channel starts to produce some volume for you, as the quantity increases, it becomes much, much easier to increase your profitability as you go.
Yep. So if you're thinking about increasing profitability through increasing orders, another strategy may be to think about product expansion, right? And I'd encourage you to think strategically about which products would complement the catalog you already have. So if you don't, you may not want to jump into a market with a product that has tons of other businesses who are already selling that product, but you also don't want to jump into a market that you don't understand or that's not complementary to your existing business. So you may want to think about products that are complementary to the catalog that you've already built for yourself. And as you're doing that, you can run small tests. You can sell small quantities of items to see what kind of initial throughput you have there. You can get product samples sometimes from suppliers and use those samples to set up some like test balloons kind of and see what happens there as you're kind of thinking about what the next pillar in your product catalog might look like.
Yeah, and if you're already on Amazon, we really recommend using the data that's available to you to make data-driven decisions. So your Amazon advertising data often contains a lot of gold in there about what your customers or your potential customers are looking for. So I'll give you an example. We sold a toddler birthday shirt for several years that was black with gold foil. And we believed that black was a gender neutral color. And a certain segment of our customers believed that as well and would buy it for girls' birthdays and boys' birthdays. But in the advertising data, we were seeing that we were getting tons and tons of clicks on a keyword for girls' birthday shirts, and then people weren't buying. And so that data actually led us to creating a color variant for pink. And now the pink outsells the black. And so whatever that is for your business, it's oftentimes that data is already available to you. You've been paying for it essentially through your advertising. There are also great tools out there like Jungle Scout and Helium 10, where you can look at competitor sales data and you can look at keyword search volumes and really use that to help inform your decision making and take a lot of the risk out of the product expansion.
Great. And obviously, like, a big key to growing your order volume is effective marketing, right? And I think most of the information on this slide can kind of be boiled down by saying Like, be good at marketing. Obviously, you want to drive reviews, whether that's on Amazon or your own site. And obviously, you want to leverage influencer networks and advertising opportunities depending on the specific types of products you're selling. And that marketing strategy is really going to vary depending on the market that your business is operating in, both the sales channels you're selling on, as well as the types of products that you're selling there. The thing I want to call out explicitly for you here is that your marketing should be geared towards the right products, right? Some products are more profitable than others, and some products are associated with more profitable orders than others. And that's like an interesting distinction. And you should know what those products are and spend your promotional efforts there, right? So here's an example that I think speaks to kind of combining intelligent marketing with making strategic product catalog decisions. So in another life, I worked for an online retail business. We sold designer merchandise at relatively high price points. And we sold a particular item, let's call it shoelaces, for 20 bucks. And now for us, 20 bucks is an extremely low price point. And we had fairly high product handling costs because of the care we put into creating product images, like staging those photographs, like doing styling. And we were probably losing money on those $20 shoelaces, right? But the analysts on our marketing team came across an interesting finding in our data, which is that orders containing those shoelaces were among our most profitable orders, and specifically orders that were generated by us advertising those shoelaces were particularly profitable. And it turns out that people who will spend $20 on shoelaces will spend a lot more on a dress or a handbag. And so those shoelaces just kind of help pull them in the door, and then they generate a really profitable order once they're on your site. So if we didn't have the ability to assess profitability at the item level and the order level, we wouldn't have we probably would have cut this product from our catalog, right? And it would have been to our detriment. So finally, like when we think about increasing the total number of sales, we should be thinking about driving repeat business and winning a customer back who's already shopped with you and had a good experience can be easier than winning a brand new customer, right? And that can be easier said than done on Amazon because at the end of the day, Amazon owns the customer relationships and sellers don't. So I love the tactic of including warranty inserts in products sold on Amazon. It's such a great way to capture email addresses while the consumer feels like you're delivering value in exchange for them sharing that information with you. And it can help you make your Amazon buyers your customers. So for example, my husband and I bought an inflatable hot tub on Amazon during quarantine. It came with a flyer inviting us to sign up for a 2-year extended warranty. I just spent $400 on like what is like basically an air mattress full of water, right? So it seemed like the right kind of thing to get a warranty on. And so I filled it out and submitted it. And now the seller has my email address and knows that I'm the type of person who buys an inflatable hot tub, right? And that's powerful marketing knowledge that they have and can use to retarget me in the future for their direct business or if they choose for their Amazon product catalog as well. So you can also drive repeat sales through selling consumable products that will need to be repurchased over and over. Maybe the inflatable hot tub fits that bill. I'm not sure, not yet. You can also become an Amazon subscribe and save seller, and Emily can kind of talk a little bit more about what that process looks like.
Yeah, so up until recently, you did have to apply for the subscribe and save program, and there was specific criteria that would result in you getting accepted or denied. Amazon just recently did an overhaul of it, and now it's essentially an automated process. So they're using some sort of an algorithm to determine whether or not your product is eligible and then auto enrolling you. The advantage is that Amazon has shouldered more of the discounted cost of the subscribe and save program. It used to have a lot to do with your seller feedback and like the number of reviews and that kind of thing. So it's safe to say that those are still the driving factors in whether or not your product ultimately gets accepted into that program through the auto enrollment process. So, you know, just focusing on the account fundamentals is important. And then, you know, things like the subscribe and save program will follow.
Great. Okay, so let's put it all together. We've kept prices high. We've understood and in some cases reduced our costs. We've increased order volume through expansion. And now what? Like, how profitable are we? How do we grow intelligently by understanding our profits, right? And the answer to that question can be difficult because some of your overall business data is in QuickBooks, right, or your accounting software. Your channel specific fees, the taxes collected, and revenues are in Shopify, Amazon, BigCommerce, all the channels that you're selling across, right? Your shipping costs are in FedEx or ShipStation if you're selling directly and shipping yourself. So you might know the big number, right? Like how much money did you make last year or last month? But it can be tough to know where those profits come from. And the way you track your true costs and your true profitability is a matter of how you want to sort the information, right? So you can sort by SKU, and you probably already know which products in your catalog have the highest profit margins. But do you know how they compare to the rest of your catalog? And you can answer that question by tracking your costs by SKU, which lets you see all of the expenses associated with each product in your catalog, including seller fees, overhead, return rates, and more, right? And so some of the fees, some of the costs associated with individual products might vary depending on whether they sell better on Amazon, on your own website, or elsewhere. And so you may see different cost structures associated with different SKUs. And understanding that will give you an honest look at your portfolio and help you make better business decisions. So you can also obviously track your profitability by order, by customer, or by channel. And for a holistic look at your e-commerce business, you'll need to look at more than profitability by SKU. You'll also want to look at profitability by order and by customer and by channel, so you know where you're driving the most profitability and where your margins are healthiest. Like, remember the story I told about those shoelaces, right? If the story had stopped by thinking about SKU level profitability, we wouldn't have understood the true value of those shoelaces at the order level. And so this is kind of where Webgility can come in, right? We automate your accounting by posting your orders, fees, taxes, and revenue into QuickBooks. And that's the initial value add. And that's why customers are attracted to us and stay with us in the long term. But the real power we deliver to our customers over time is the ability to kind of unite this data into a single repository to help you track expenses like the ones listed here. And profits across a number of different vectors. And it really helps you understand your business in a more complex way and at a more granular level. So I'm going to return to Groomers Pro, who we talked about kind of towards the beginning of this presentation. The president of that company told us that he really didn't have a handle on his numbers until he ran his first profitability report in Webgility. And he said, the first thing I did was pull the profitability report. I didn't know I was losing money. My advice would be to really understand where the costs are coming from and how you'll be able to minimize those so you can become more profitable. And to Emily's point, like starting when you're launching a new sales channel, you may find that that channel isn't profitable to begin with, but once you've been running a business, once you've been running a specific channel for a while or selling a product line for a while, if you're still not able to make it profitable, that might be the moment to step back and say, okay, is this product line working for me? Is it working for me on this channel, or do I need to limit the sales of this product to another channel? And that's where dividing your profitability information across a number of different vectors can be helpful in assessing exactly what to do with your business, your products, and your sales channels. And so Webgility does this through kind of like seamless cost tracking that will help you boost your profits, right? So we help you account for all your costs. When you're selling online, you're kind of paying that ever-changing rotation of fees and other operating expenses that only increase as your business scales. Many of these costs are hidden, so you don't know exactly what you're paying. But with automation, you eliminate human error, and so you see every single transaction without having to kind of comb through a month's worth of receipts and credit card statements or toggle between multiple platforms that house data. And then we can automate and standardize your cost reporting as well, right? Your financial data is scattered across your business performance reporting, and the platforms themselves, to Emily's earlier point, calculate profitability differently, right? Amazon includes all those costs right from the jump, so you see your net profits on Amazon, but you're only seeing your gross profits on your direct sales channel, right? Any operational costs don't get factored in at the sales channel level. So you don't necessarily see your true profits unless you pull all of your data into QuickBooks, which Webgility does for you. And then I'll just give a plug here for Webgility's latest reporting advancement, which is Webgility Mobile. This is a new analytics engine that allows Webgility users to access their financial data from anywhere. You can do it you can use it on a desktop or on your mobile device. So Webgility comes standard with a variety of reports that can be built into a custom Webgility mobile dashboard for kind of an at-a-glance view of these metrics that we've been talking about today. The bottom line is, like, there's a number of ways to grow through stabilizing your prices, cutting costs, growing your order volume. But to grow intelligently and over the long term, you really have to understand your true profitability at multiple levels, by product, by order, by customer, by channel, these things we've been talking about today. And Webgility can help you do that. And experts like Emily can help you do that as well. So now I'm going to open it up to questions. You can submit those through the chat function here, and Emily and I will do our best to answer any questions you may have.
All right, looks like we've got a question here from Pez. He's saying, we were considering Webgility, however, it doesn't support all our channels, which leaves us with incomplete data. How do you recommend using the Webgility platform when you sell in some channels that Webgility doesn't integrate with yet? You end up with incomplete data.
Yeah, let me take that question offline. I think it's probably you probably have like a more complex sales channel mix that will probably kind of require sort of one-on-one triaging. I will say Webgility integrates with over 50 different sales channels and shipping platforms. So it's not a question we come upon a lot, but it is something that we can kind of chat about offline. Sometimes Webgility can do customizations for customers who have more complex channel arrangements that can help you get your data in from stores or platforms that we may not connect to. We often use this if someone is using like a custom shopping cart that was built for them by a developer. So if you want to pop your email address into the private chat and just make it go to panelists, I can reach out after the webinar.
Perfect. Thank you. We've got a question from Jeremy. What are the key differences between Webgility versus Channel Advisor?
Yeah, so that's a good question. Channel Advisor focuses, I would say, more on the outbound sales strategy associated with operating an e-commerce business. Webgility is really focused on kind of what I would call your back of the house operations. So we're our primary value add is this ability to automatically post your order details into QuickBooks directly from your sales channels, and then also communicate inventory levels back to the sales channel from QuickBooks. So it helps you keep an accurate inventory count, which is especially useful if you're selling from a single pool of inventory across multiple channels. And this saves our customers on average about 50 hours a week of manual data entry that they're doing to get that data into QuickBooks if they're not automating it. And so I would think about the business as a solution for kind of automating your back end operations, and then through doing that, providing you this additional visibility into your business metrics.
Perfect. Thank you. Okay, so we've got a question from Bill. He says, what would be a good budgetary amount to budget for a typical high-level profitability review, not detailed? Engagement to review Amazon and Shopify sales and an existing Webgility installation, 20 to 40 SKUs.
Budget for I'm not sure I'm understanding the question completely. Are you looking for, sorry, are you kind of tracking with this, Emily?
I'm not totally, okay, so it sounds like he's looking for consulting. So it sounds
Okay.
like he's wanting Webgility, some consulting to basically look at his Amazon and Shopify sales and help kind of do a high level review of his profitability by those two channels for 20 to 40 SKUs.
Sure. So that's where I think like Webgility and a consultant like Emily can work really well together. If you're selling across multiple platforms, Webgility can kind of help get that data into a single place so that it's easier to analyze. But when you're thinking about like consulting related to kind of growth strategies and profitability around individual SKUs, especially on Amazon, that's something that I think Emily would probably be best at fielding. Would you agree, Emily?
Yeah, so Bill, I'm happy. I've opened my calendar. I have a few slots available for Amazon strategy sessions. And this is actually complimentary. If you go to go.elevategrowthgroup.com, you can review a few of our most recent case studies, and then you can actually click and book some time directly on my calendar. So I'd be happy to just kind of use that time to talk about your Amazon strategy and what your goals are. And also just take a high level look at your profitability as well. So if you want to come prepared with numbers and, say this is what my cost of goods percentage is, and here's what the Amazon fees are, and whatever, we can take a look at that together. Patrick said, I'm trying to settle my monthly sales against the Amazon settlement reports. I need to track that the deposits in my bank account from Amazon match my sales and profitability reports. Does Webgility provide this functionality?
So I'll say yes, asterisk. Webgility will help you marry the information coming from your bank to the data contained within your Amazon settlement report, and will help you account for the fees that you're being charged on your Amazon settlement report appropriately. That's something that we can do and do well. I think like depending on the specific reconciliation issue that you might be having, I would encourage you to book a Webgility demo so that the sales team can understand the granularity of the issue that you're having. But a lot of Amazon customers do come to Webgility because of our ability to kind of make sense of the Amazon settlement report within their QuickBooks.
Perfect. We've got a question from Jeremy. He's saying, we're looking to replace our old MAS 90, now Sage 100. Other than QuickBooks, what other software would you suggest that works best with Webgility for inventory and order management between Shopify, Amazon, and other third-party marketplaces?
Yeah, sure. So the majority of Webgility customers are on QuickBooks. I think that's just a function of operating in the US market where QuickBooks is very common. We do also integrate with the NetSuite ERP, which is most appropriate for much larger companies. And then we also have a Xero integration, which is a little bit more popular in the international market, but we're able to integrate with Xero for US customers as well.
Awesome. And then we've got one last question from Amy. Do you have instructional videos using Webgility?
Yeah, I have a repository of videos. They're contained on our website in the help section, and they help our existing customers kind of implement their stores and connect all of their sales channels to Webgility. And so those videos would likely be helpful for you. They're in the support section if you'd like to find them on the website. If you'd like to have someone specifically go through the how-to of Webgility with you, you're welcome to book a demo on the link that you see on the screen. Yeah, I would say that additionally, though we have those how-to videos available to help customers understand how to connect their stores to Webgility and how the syncing between your sales channels and your QuickBooks will work with Webgility. A lot of our plans do include white glove onboarding, so most of our customers don't have to do that themselves.
Awesome. And that concludes all of our questions.
Great. Thanks, guys. I think that was a really great discussion. I hope that you found the content helpful. There's some contact information for Webgility and for Emily up on the screen here. If you want to contact us post-webinar, feel free to do so. This webinar will be available on demand as well in the next couple of days once we get the recording up on the website. So if you want to take another look at it or share it with other folks who may not have gotten the chance to attend, feel free to do that as well.
Awesome. Thank you guys so much for your attendance and your great questions. We hope you got a lot of value out of it. And if you'd like to follow up with us directly, you're welcome to do so.
Yep. Thanks a lot. Enjoy the rest of your day, everybody.